Welcome to the Maze Dive, the Sunday edition of the Money Maze, where we grab one JSE stock and pull it apart like a bunny chow. Messy on the outside, but properly satisfying once you get into it. I'm your host Jay, and today we're talking about the JSE favorite dividend machine and a payout that just got chopped so hard income investors are still sitting in stunned silence. I'm not giving you the number just yet though. What I will tell you is that the company insists the mine did almost nothing wrong, which sounds exactly like your lift club mate swearing he left on time. It was the traffic, the robots, the universe. But keep that mate in mind. Here's the whole story today. Because this is a company that digs the product out of the ground just fine. Still, it cannot control who drives it to the harbour. Kumba Iron Ore, Anglo's baby, running the Sishen and Kolomela mines in the Northern Cape, shipping premium iron ore to steel mills around the world. For years, Kumba was the rich uncle on the JSE. Back in 2021, the share topped 800 Rand and the dividend flowed like brandy at a December braai. If you screened EasyEquities for dividend yield, Kumba was always loitering near the top of the list, just winking at you. Then last Tuesday, 28th of July, the interim results landed, and here's your number. The interim dividend went from 16.60 Rand a share last year to 7.90 Rand, at more than halved. Headline earnings per share fell 41% from 22.26 Rand to 13.24. The rich uncle just arrived at the wedding with a card and a firm handshake. Let's see how deep this pothole really goes. Revenue for the 6 months to end June came in at 30.9 billion, down 11% from 34.5 billion. EBITDA dropped 32% to 10.9 billion and the EBITDA margin shrank from 46 to 35%. In plain English, for every 100 Rand of sales, Kumba used to keep 46 Rand before the accountants got clever. Now it keeps 35, still a lovely margin, but the trend is going the wrong way. And here's the important nuance though. That 7.90 Rand dividend is 60% of headline earnings, and Kumba's stated policy is to pay out between 50 and 75%. So the payout policy didn't change, the earnings did. Kumba didn't get stingy, it got poorer, and it handed you the same slice of a much smaller cake. Here's the 3 things that did the actual damage, and count how few of them happened at the actual mine. 1. The Rand. The Rand strengthened 11% against the dollar on average, and that alone stripped 3.2 billion off of revenue. Kumba earns dollars and pays cost in Rand. So a strong Rand is like a gym buddy finally getting fit, right when you need him to stay useless. Great for your import PlayStation, brutal for an exporter. Number 2, the iron ore price and China. The average realized export price slipped 1% to $90 per wet metric ton, costing almost $1 billion in revenue. China's crude steel production fell 3.1% in the first half, and Kumba's sale to China dropped from 58% to 53% of the total, as it deliberately shifts more ore to Japan, South Korea and the rest of Asia. When Chinese builders slow down, Northern Cape shareholders feel it. That's globalization for you. And number 3, the weather and our lift club mate. The Northern Cape had its heaviest rain at Sishen since 1963. And at Kolomela since 1918. Read that again. The last time Kolomela saw rain like this, the Spanish flu was breaking news and nobody owned a bakkie. On top of that, Transnet ran a planned 10-day maintenance shutdown in May, which is the main reason the sales volumes dipped. The lift club mate didn't just leave late, he took the bakkie in for a service in the middle of the school run. Kumba says roughly 90% of the EBITDA decline came from the external factors, not the mine itself. So let's look at the bull case first. Operationally, this business held its nerve. Production fell only 3% and sales just 1% despite biblical rain and idle trains. Kumba still got $90 a ton, 8% above the international benchmark, purely because its ore is better quality than everyone else's. There's 12.1 billion in net cash on the balance sheet and 10.1 billion in cash generated from operations. And the UHDMS upgraded Sishen, with 96% of detailed engineering already done, will push premium grade product from under 20% to above 50% of output and extend the mine's life by another 6 years. Personally, I'd rather own a cyclical company having a bad 6 months than a broken company having a good one. Now let me argue with myself a little because, well, the bear case is real. Everything above depends on two things Kumba cannot control: the iron ore price and Transnet. Attributable free cash flow collapsed from 7.9 billion to 1.9 billion, mostly from the heavier capex. The share peaked above 800 in 2021 and has been grinding lower since, down about 19% in the 12 months before the trading statement. And here's the lesson for every yield chase on EasyEquities. That juicy trailing dividend yield you saw on Kumba, the market priced it that way precisely because it suspected the payout was about to shrink. A high yield is sometimes a reward. Sometimes it's a warning sign wearing a party hat. This week it was the party hat. Now it's time for your Stokvel starter pack for the JSE Jedi Kumba edition. HEP's headline earnings per share is profit per share with once-off noise stripped out, the cleanest view of the underlying business. Payout ratio is the slice of those earnings paid as dividends. Kumba pays 50% to 75%. So dividends rise and fall with profits by design. Cyclical stock is a company whose fortune follows commodity prices and the economy, a big up and a down big as well. And the golden rule, high yield doesn't mean safe. If a dividend yield looks too good, the market may already know something you don't. Our Lift Club mate says he'll definitely be on time for the second half. Kumba shareholders are standing at the gate with their lunchboxes, hoping. As for me, well, my jokes have a better on-time record than those trains. But that's a low bar and we all know it. So remember, this isn't any financial advice. Please do your own research or speak to a licensed advisor. Catch you next week on another episode of The Maze Dive.